How's it going, everybody? Welcome back to Trades and Gains. It's your favorite market analyst, Max Pitts. It's April 30th, 2025, and this is your ultimate daily market rundown. And yes, our options flow is powered by Investor Central Club. Today, we had markets doing their best roller coaster impressions. Tech giants flexing and flopping, economic data shaking Wall Street, and big money options trades lighting up the tape left and right like it was Christmas. I'm breaking it all down for you: what matters, what's noise, and where the smart money is flowing. Buckle up, because this one is absolutely loaded, and no, I'm not talking about baked potatoes. The S&P 500 finished the day barely green, up 0.15%, as we can see here. We had the Dow Jones with its continuing the longest win streak in 2025 so far. That finished up 0.35%. And the NASDAQ dragged ass with a barely below flatline 0.09% loss. But let me be clear, this wasn't a boring sideways day by any means. It started off ugly. We had a steep sell-off after a nasty GDP print and then a surprise China tariff update that helped reverse the mood. The morning kicked off with a shocker, and no, I'm not talking about one in the pink and two in the stink, or whatever that saying is. The morning kicked off again with the shocker. The US Q1 GDP contracted by 0.3%. First contraction in 3 years. And the expectations, a mere 0.1% drop. Wall Street absolutely panicked. Investors hate surprises, especially when it hints recession. But then midday, a state-run Chinese account on social media posted that the US had been reaching out, negotiating on tariffs. Markets went ding ding. Dow reversed nearly 600 points from the lows today. And then this is the market that we're in right now, driven by politics, tweets, and tariff rumors. But we're not done there. Now, also another thing here, ADP payrolls grew only 62,000, and that was a huge miss. But some good highlights: consumer spending is up 0.7% versus 0.6%, and personal income also rose 0.5% versus 0.4%. So let's talk about some earnings, because it was an absolute battlefield, but let's talk about our big boys, our cajanas first. Microsoft, Q3 EPS came in at 346 versus 321 estimated. Revenue was in at 70 billion versus 68.4 billion, and it was driven by, surprise, cloud growth. And the after hours pop was 6% on this. Meanwhile, Meta came in and crushed butt. EPS came in at $6.43 versus $5.25. Revenue is up 42.3 billion versus the 41.3 billion expected. Ad revenue was strong despite the tariff fears, but CapEx guidance was raised again. The stock jumped post-market as well, about 5%. Now, some macro data you need to be aware of, people, because the Fed is watching, and so should you. Core PCE rose 3.5% in Q1, above 3.2% expected. Consumer spending rose 0.7% in March, and personal income rose 0.5%. What does this mean? Inflation isn't under control, for one. That's for damn sure. GDP is shrinking faster than your sphincter. Rate cuts? Yeah, don't count on those anytime soon, buddy. The translation of all this BS, though, is stagflation fears are creeping in bad. So, yeah, not a good mix for assets right now. Now, let's go ahead and switch over to our favorite options flow tool, Investor Central Club, and talk about some of our data from today. So, to kick things off here, we had some big whales up in the pot today. We had some meta calls at the 565 level for a 516 expiration. Bullish bet on continued momentum there, obviously. Microsoft, we saw the 395 calls 5/2 expiration with 9,000 contracts, and that was right before FOMC. Very interesting timing. We also saw the 105p 718 expiration size, 4,000 contracts, with bearish hedging ahead of AI regulations coming in. And then Tesla, we saw 385 calls expiring 718, seeing call volume spike across different expiration dates. Is there a possible short squeeze in motion here? Maybe. In PLTR, we had the 180 call with an 1122 expiration that came in on the Stacks AI today. And there was a volume surge of about 1,389 contracts that came in with a $1.38 million premium. The big takeaway: the funds are positioning for big moves around earnings and macro. The size of these trades, this is definitely not retail. Somebody knows something. Now let's go ahead and talk about our dark pool spotlight. So, SPY, winner of the day, 442.2 million at the $552.77 spot. IEF came in second with a 236.4 million block as well. That could be a hedge for safety. VU, we saw 185.4 million, and QQQ, we saw 133.6 million. And also notables that we saw were Tesla, Google, and Meta, which all saw dark pool activity above 100 million as well. Combine that with options flow, and you've got institutions hedging aggressively while nibbling on risk. Now, some sector movers we had here: healthcare and staples are leading. Energy was the worst performer, by the way, and it fell 4%. Some stock movers: we had Starbucks down 7.8% after a weak quarter, fifth straight quarter of falling U.S. sales, by the way. SMCI is down 16% after cutting revenue forecasts. NVIDIA is down 2% on AI export rule fears. Stellantis, or STLA, is down 3% after pulling guidance due to tariffs. And HUM is up 5% on Medicare numbers. Meanwhile, Seagate surged 9% on positive Q4 outlook. And that was our stock movers for the day. Now let's wrap this all up in a burrito and send you home. We had a bad GDP print, hot inflation, big tech earnings, whales circling the options market, and dark pool moves. If you're not watching the data and the flow, you're basically trading blind. And again, we're running that special with Investor Central Club. Use the code 125 and you can get your first month for only $25. And if you want this kind of daily insight, make sure you smash that subscribe button, like button, leave a comment below of what is your number one ticker on your watch list, and I will see you guys next time. Peace, profits, and have a great night, fellas.